All right. Good afternoon, everybody. It's Matt Braden from the GPAR team. So glad to see such a strong turnout here for today's workshop. Before we get into our guest speakers, I just want to give a warm thank you to all of our GPAR members who participated in our virtual 5K that was done in conjunction with the National Association of Realtors GAD Institute. All the government affairs directors from across the country were here in Philadelphia last week, and they selected a charity, which is the Philly First Home Program, which gives grants to Philadelphia first-time home buyers to help them get ready for buying that home. And then they help out with up to $10,000 for a maximum amount for each grant. And so we did our virtual 5K, and that contributed to a total of over $38,000 going into that grant program. So we look forward to making that check presentation somewhere down the road. So for all of you who have participated in the virtual 5K, thanks for getting out there. Last week was a really hot week to run, bike, walk, row, however you did your 5K. Thank you for doing that. Thank you for raising some money. We really appreciate that effort. It's going to make a big difference for a number of families, and that's a super cool thing. So again, thank you all for those who participated. Let's get to today. Philadelphia Real Estate Taxes 101. We've been talking a lot about real estate taxes. We just came through the Philadelphia budget season, which came to its conclusion at the end of last month. And we did a whole lot of advocating for property owners as related to assessments and to get some relief for property owners. Thank you to everybody for responding to our call to action. City Council heard you loud and clear, and they put in some measures to go ahead and make those new assessments a little less harmful than they were at the outset of the process. So that dovetails into what we're talking about today, and that's real estate taxes. We're so lucky to have Rebecca Lopez Chris. She's the Deputy Commissioner of the Department of Revenue, and we also have Jonathan Liss. He's a Senior Revenue Policy Analyst there at the Department of Revenue. We're really grateful to have their expertise and knowledge with us today. If you remember back during the shutdown in the pandemic, Rebecca joined us when we had no idea what we were doing on Zoom, and we kind of winged it. We threw something together. It was a super well-attended workshop that we had. So it was great content, and it was super helpful. And she was very gracious to us at a time in which there was a lot of stuff we didn't know what the heck was going on. But before I turn it over to John and Rebecca, one last quick shout out. We have the Vice President for the Pennsylvania Association of Realtors, Preston Moore, with us all the way from Pittsburgh. Preston, thanks for joining us today. We're glad to see you here on our Zoom. Rebecca, John, the floor is yours.
Great, thank you. Thanks again for having us. We're always happy to address groups and answer questions to the best of our abilities. I'm Rebecca Lopez Chris. I'm the Deputy Commissioner for Policy and Outreach. We're going to do a really high level kind of 101 on real estate taxes. We'll also talk about some of the recent changes. I don't know if any of you saw, the mayor did a bill signing yesterday for assistance on real estate tax. And also there's been changes to the abatement. So there's a lot of moving parts. So we'll try to get through some of that stuff today. And again, if you have questions, throw them in the chat. Matthew, I'm going to ask you to, if we miss them, because sometimes it's hard to see chat and share screen, if we miss them, to don't be afraid to interrupt us. Okay.
All right. I got you.
Cool. All right. So let's see. Okay. So we're going to kind of do we're going to do, like I said, we're going to do an overview of the real estate tax itself. What is it? How does it get divided? Where does it go? Also the calculation. We'll talk about abatements and exemptions. We'll talk about the timeline for paying the real estate tax bills, and kind of what you can expect out of the Office of Property Assessment right now. I know there was a whole big hubbub about the release of assessments online, but people haven't gotten their letters yet. What does all that mean? We'll also talk about use and occupancy tax, which is another tax that affects real estate. And we'll also do a quick plug around the Philadelphia Tax Center, which is the city's new system for filing and paying taxes online. It's a two-phase system. Two-phase project, so we'll talk more about that as we go. Okay, John, is this your slide or is this my slide? I can't remember.
I'll take this slide. Okay, thank you. Great to be here, everyone. John Liss, Senior Revenue Tax Policy Analyst for the city. So as you all know, the real estate tax goes to both the school, to fund the school district, 55% of it actually, and 45% of the tax goes to the city general fund. The uniformity clause of the Pennsylvania Constitution requires both commercial and residential property to be taxed at the same rate. The current real estate tax rate is given there. It's 0.7681%. That's the school district, and 0.6317% is the city. So the total is actually 0.013998 if you want to do it in terms of decimals. So a mill, it basically means that for every $1,000 of a property's assessed, $1 tax for every $1,000 of a property's assessed value. That's what a mill represents.
Okay. Oh, and just a quick aside. The city collects about $1.5 billion in real estate tax every year. And like John said, 55% of that goes to the school district and 45% of that tax goes to the city. One of the things that people get really confused about is that there is a separate tax in Philadelphia called the school income tax, and they kind of get confused with that school district portion of the real estate tax. The school income tax is totally separate, and we're not going to talk about it in depth here today, but it is essentially, it's an income tax on unearned income. So if you had rental income or dividend income or stuff that's short-term gains, that is part of that goes to that gets paid through the school income tax. Think of it as like a wage tax, but not for wages earned, but for unearned income. Okay. So if anybody's got questions, throw those in the chat, because I know that can be a little confusing. But okay, John.
Sure. And also the school income tax only pertains to residents of the city of Philadelphia, not non-residents.
That's right.
Okay. Next. Okay, so it's the Office of Property Assessment that actually determines the value of the property on which the taxes must be paid. So we're not going to get into how the OPA values property. That's a whole other animal. So there is a reassessment, which I'm sure you're all aware of all Philadelphia properties, 580,000 residential and commercial properties in the city, and that will take effect for tax year 2023. And the new assessments have been delayed because of the pandemic, of course, and other technical issues. So since the actual value initiative took place, the assessments were to occur annually, but in practice, this just hasn't happened.
So John asked what % of assessed tax is actually collected. This varies from year to year, but I would actually love to ask the group, prior to the pandemic, does anybody have any idea what % of real estate tax the city collects in the year of levy? So the year that we bill it, how much do we collect? Does anyone want to throw ideas in the chat? Oh, Matt says 98%. That's Charles says 50. Thanks, Charles. It actually was 96.3%, I think, in 2019. So that means 96.3% of real estate taxes was collected in the year of levy. Typically what happens is with any of those taxes, so thank you, Matt, for giving us the extra credit on the 98. Typically what happens is after the fact, when we do more compliance work and try to get overdue and delinquent taxpayers to pay, that number squeaks up. So, out 2 or 3 years, you'll see that creeps up to 98 and 99% each year. Okay. And then the other question, which was about where you haven't received the assessments in the mail yet, how can you file a first level review if you've not received the forms? It's my understanding that the OPA was shooting to get those out in the mail by September. I think if all goes well, and I don't want to jinx it, those will actually be going out in the next couple of weeks. So people should actually see those in mid-August. I think you can file a first level review online if you don't have the form. And I think that's through phila.gov/OPA. I will double check while John is talking and put that link in the chat. You can go ahead and file a first level review if you want at this time, because you should be able to look at what's online now and see where the assessment falls, and that's at property.phila.gov. There was a little bit of a, some properties might wiggle around just a little bit, but I think at this point, everything in there is completely up to date. So I think you can do that all online, and I'll put those links in the chat. Well, okay, and then Elizabeth says she couldn't find the first level review forms online. How can we possibly file and review before the 2023 tax bills go out? The tax bills don't go out until December. The deadline for a first level review, I think, is in October. The deadline for a first level for review with the TRB, I think, is in October. I will put all those links in the chat, and we can talk more at the end about assessment stuff. Okay.
Yeah, Rebecca, I believe the first level review form is actually enclosed with your tax bill.
No, it's enclosed with the assessment.
With the assessment, I'm sorry.
Yeah, it's enclosed with the assessment. So everybody's going to get it before the deadline. And then what would end up happening is if you have an appeal, you can technically pay the previous, if you file an appeal with the TRB, you can technically pay the previous year's assessment for this year only. That's not normally the rule, but it is for this year. We have that in here, don't we?
Yeah, okay. And I see there's a question, what's the difference between first level review and other tiers? So we'll be getting to that. It's a few slides from now. Okay.
There we go.
All right. So
go ahead, John.
Okay. Yeah. So this is just a real, short and sweet example of the tax calculation. Start out with market value, which is the taxable assessment. Then you subtract the homestead exemption, which has been increased to $80,000 effective with the 2023 real estate tax bills through recently enacted legislation. So the net taxable amount is 120,000 times the tax rate, gives you a real estate tax of 1,680. It's fairly straightforward.
I think that's kind of the beauty of AVI is once you know the assessed value, and if you know if the person has a homestead, you can very easily calculate what the tax will be. I think in the past and in other places, it's not always as straightforward because they have some other wacky ratio in there.
Exactly. Okay, so now I'll turn it over to Rebecca, and she's going to discuss various abatements and exemptions for real estate tax.
So on the homestead, I think most of you probably saw that the homestead was increased from 45,000 to 80,000. Anybody who has the homestead already doesn't have to reapply. It's just, it won't happen automatically. They'll see it on their bill that they'll get in December. That is for the bill that's due in 2023, your 2023 taxes. I think a lot of you probably are very familiar with the tax abatement program, the 10-year tax abatement program for both residential and commercial projects. So as you know, a lot was kind of fiddled with on that. But so for applications that were filed after basically this year in 2022, the 10-year property tax abatement on the value of improvements for residential properties is reduced 10% each year over the course of 10 years. you get 100% abatement in that first year. So it basically reduces the value of the abatement about 45% over time. I think in some ways this is maybe preferable so that people don't get this like big shock at the end of 10 years about their tax bill. The thing to keep in mind is that the land value is always taxable. So if you look on the property website, it's broken into land and improvement, and improvement basically just means the building. Those folks with an abatement still have a tax bill, and they still have to pay on the value of the land. And if the value of the land goes up, they will have an increased real estate tax bill. For the 10-year tax abatement for commercial properties, for new construction or rehabs, they've reduced the value of the abatement from 100% to 90%. The other thing to keep in mind is that I think you see a lot in the media or with certain folks who really lament, or they don't feel like the abatement is fair. They feel like only very wealthy condos in Center City take advantage of the abatement, or only one type of person is able to take advantage of the abatement. The thing to keep in mind is that every low income housing project in the city of Philadelphia has benefited from the 10-year tax abatement. It's built into their financing, that reduction in cost for them. So that the benefits actually are spread across income levels in Philadelphia. And I don't want there to be a misperception about who benefits. I think that's the one thing about the abatement and why it's so successful, is because it's so easy to get. Are you doing a new project? Great, you qualify, so, and it's relatively easy to apply for, other than rather than other tax credits. So I think people I just want to get that out there, that even low income people and low income housing projects have benefited from the 10-year tax abatement. Adam asks, does the city's market value usually match true market value, or is it traditionally lower or higher? If it's higher, I would strongly suggest that you appeal and would have evidence to appeal that. And if it's lower and you appealed it, it's potential that they could raise it. In ABI, I think we've only gone through 2 or 3 rounds of, big reassessments. I think it really varies. So, okay. I'm going to very quickly go through some of the programs that the city has put together, and a lot of these came out of AVI. A lot of them have been tweaked over time. Certainly the homestead was like that. And so they're always changing, and they actually may continue to change, even though there was legislation that was just passed. But if you are a very low income senior citizen, like living on Social Security, the income levels are actually pretty low. It's like $42,000 for a married couple and 30 something for a single person. We basically we can freeze the value of your tax bill, and we prevent your tax bill from ever increasing, so long as you meet the age and income requirements. So you have to be over 65. Like I said, you have to be very low income. Even if the rate increased or the assessment increased, that bill is always going to be constant. The program was just expanded so that, let's say, you're a senior and you just figured out that you would have been eligible for this program, and you would have been eligible prior to this year. City Council passed an ordinance that says you can actually get the benefit retroactively. And it also is expanding the deadline. So folks have well into next year to apply for this program, to be applied to whatever year they became eligible. So there's going to be a lot more about this for low income residents. So I know that maybe that might not apply to all of your clients, but if you have neighbors or family members or church members or community members, whatever, this is an important thing to know about. It's a very, very powerful program to help keep people in their homes. Bob Gessler, we will absolutely share these slides when we're done. Oh, thanks, John. Okay, Loop, long-time owner occupants program. Ugh, everybody loves Loop. Loop is a program that basically was born out of ABI for folks who saw like massive increases, like 3 times, the assessment increase, right? It was meant to help buffer that change. Since then, the program has gone through a lot of changes, mostly expanded and contracted income eligibility. And what the big thing though is that it's changed the value of the amount that your house has to increase year over year. So currently, if your house's assessment has increased by 50% or more from the previous year, and you've lived in your home for 10 years or more, and you meet the household income limits, which are fairly high, they're actually at 120% of AMI, and all of those numbers are online, you would qualify for a Loop. What it does is it locks your assessment at 50%, like 1.5 times what it was. It just locks it in, and so long as you're eligible for the program, that's what your assessment is going to be. Now, if the rates changed, your bill would go up or possibly down, but I don't anticipate that happening. If but basically it's giving you a very consistent bill every year. The big change that council made this year is that it basically allows you to go back, and if you had an increase of 75% over a 5-year period, you would also qualify for Loop if you met all those other requirements. And you need to be able to show that you lived in that house for 10 years and that you've been responsible for paying those bills. Again, you have well into next year to apply for this program to be applied to the 2023 tax year. This year it gets real hinky, right? Previously, the homestead, when it was at $45,000, it was a little bit of a no-brainer, like, oh, I'm going to get a way better deal with Loop, because you can't have Loop and homestead at the same time. I should get into Loop and I won't worry about homestead. Well, now with an $80,000 homestead, homeowners need to make like a choice. They need to think through what is going to be best for them, and it really is going to vary from household to household, right? Like, what's the difference in cost for them? How long do they plan to stay in the house? Like, do they want a shorter, do they want like a lower bill for the short term, or are they going to pay a little bit more now to know that in the long term they're protected? So it really depends. It's going to vary by household. So that's going to be a big gotcha for homeowners this year who are applying for Loop, because once you get into Loop and you decide like, no, homestead's going to be a better deal, you can't get back in for that qualifying event.
Rebecca, could I jump in for a moment there?
Yeah.
So I realize that there's going to be some decisions that some property owners are going to go and have to make as a result of these new bills coming into fruition, if you will. Does the city have any sorts of plans of outreach to let property owners know? And then on the backside of that, what can GPAR do to help out with that messaging effort? Because we're ready, willing, and able to assist.
So we absolutely will be doing a lot of outreach. For one thing, the bill requires us to send letters and notify anyone who we think might be qualified. So we look at anybody whose assessment changed the appropriate amount. We don't know how long that person might have lived in the home. We can kind of guess if we look at property records, when did property records change? So we will send out a letter, and then this year it's going to just be more complicated to help them, to help explain that they have to make that choice. And I mean, we'll be doing a full court press on this because it is so confusing. We'll be putting together, toolkits. We'll be doing multilingual materials, all that I expect to see in the fall. And I think what we'll really see is like when people actually get their tax bills, there's going to be a huge push for this. So, definitely it's all a little bit of TBD. of how it will all go down, but we'll definitely be reaching out to community stakeholders.
And I think, Rebecca, just thinking out loud here, I think it would be very helpful to have some sort of a calculator so people can compare.
Yeah.
Make that available on the website.
I mean, in the past, we've done letters that are actually customized, so it like shows what the benefit would be with or without the program. So we're able to do that as well, you know, where we do a mail merge that can put the comparison side by side. Very quickly, I'll talk about UPA, the owner occupied payment agreement. Essentially, UPA is a payment agreement for owner occupied homes that everybody in the city qualifies for. You know, if you find that you cannot pay your property taxes, you can get into a payment agreement, and it is one of the most progressive programs in the country. So depending on your income level, basically what we do is we base the cost of the payment agreement or the monthly payment on your income. So some very, very low income folks, like who are like, you know, living strictly on Social Security, they can qualify for as low as a $0 a month monthly like payment agreement. The city still puts a lien on their house, but eventually whenever they sell it, we would recoup those taxes. For folks who are, let's say, higher income, I don't know, let's say you lost a job. I don't know, there's a major pandemic happening. Let's say you had a baby. Let's say, you know, something happened to disrupt your income. Suddenly you can't make the same payment that you used to be able to make. We can still work with you. We can still put folks into a plan. So there is no reason for any homeowner in the city of Philadelphia to have overdue taxes. Like the second you think, or the second one of your clients thinks that they're going to have a problem, they should reach out to the city and we can get them into a plan. Elizabeth, you are looking for information line. A great one, and I will put it in the chat right here, is there's a homestead hotline that has a lot of information about all these programs, 215-686-9200. And I can also provide, like, we have like a cheat sheet of all of the city's programs, and I can provide that as well. That even has like the eligibility numbers for 2022, like how much, what are the income requirements? Because of course, the way all of this is legislated, every program has a different like definition of income even. So it's awesome. Okay, you're also not, for just really quickly on UPA, you don't have to make a down payment. Like, it's a really, really powerful program. I mean, and also on that, to that end, the city has really, really progressive and powerful protections for water customers. So like anybody who's having any problems paying anything, like reach out. That's just always the message. Tell them to reach us out and call us. And there's usually something that can happen. Okay, is this me, John?
It's me. Next few slides. Okay, so real quickly, the timeline for paying real estate tax bills, they're sent to taxpayers around December for the following year, and the payments are due March 31st of the following year. And there's no longer a discount for paying early. There used to be a 1% discount if you paid your real estate tax bill early. That was repealed.
That went away during the pandemic.
Yeah. Okay.
Okay, here we go.
So here we are, the appeals. So if you are not happy with your real estate tax assessment, you have an opportunity to appeal. And there are two levels. The first level review is an informal review by the Office of Property Assessment, or OPA. The form is actually enclosed with the assessment notice, like we said before, and it's due, I think the due date varies, Rebecca. I wasn't really quite clear on this, but the due date should be indicated along with the review form. And typically, you know, when you make this informal appeal, you should include photos or recent appraisals or anything that's going to support, you know, your contention that the assessment is too high. The second level of appeal is you do have an option to file, it's a formal appeal with the Board of Revision of Taxes. And the timing of this is that you would submit an appeal application for the tax year 2023 by October 3rd of 2022. And you also have the option to request a public hearing before the board, an oral hearing. So you go there in person, you bring your evidence, you can have someone represent you. Again, that's a more formal level of appeal.
I put a link in the chat. It looks like if you don't have your first level review form, you can use that same number, 686-9200, and request a replacement form. So I'm sure that they are very busy getting with phone calls on getting those out. But if you don't think you can wait till mid-August, you can call ahead of time. And it sounds like, according to the website, that they were planning to adjust the deadline for first level reviews depending on when they were able to get the notices out. So the big thing, and this is actually a huge problem for us as well, since we send out 500,000 pieces of mail every month or more, envelopes. Like, there actually is a huge envelope shortage in the country. I mean, I don't know if any of you have faced this or found this, but like, quotes that the Department of Revenue got even to do the billing for this year's real estate tax over the last couple of months have changed substantially. It's like $20,000 a year more than it cost us last year to send these out because of envelopes. And that is Looney Tunes, but that is where we're at. Okay.
Okay, next. Okay, so just a little bit more about the Board of Revision of Taxes, which is the second level of appeal. Again, it hears property assessment appeals from the Office of Property Assessment. Property owners who believe the assessed value of their property is incorrect, generally too high, are authorized to file an appeal. So the appeals need to prove at least one of the following: either the estimated value of your property, the assessment is too high or too low, or the estimated market value of your property isn't uniform, it's not consistent with similar surrounding properties, or the characteristics of your property that affect its assessment are substantially incorrect. Okay, so that's it for assessment appeals. And now we're going to turn to U&O tax on the next slide. So the origin of the U&O tax, it's basically, my understanding is that it was an effort to shift more of the tax burden to commercial industrial property. So and it's used to fund the school district, very important. And it applies to business or other commercial use and occupancy of real estate that's located in the city. So the tax is due if the business is located in the city or operated from a Philadelphia residence. So you can have a mix of a business and residential property, or tenants, subtenants, or owners use the property for business purposes. So in the case of the landlord, landlord collects the tax from its tenants and remits it to the city. As far as filing returns, the tax rate is 1.21% of the assessed value of the property. Monthly U&O returns must be filed online, and the tax paid on the 25th of each month for the same month's activity. And I believe, correct me if I'm wrong here, Rebecca, but there still is an option, I think, to file on an annual basis if your tax is low, right?
It's if your tax doesn't change. If you meet certain characteristics, you can file on an annual basis. Like if for some folks, tenants change all the time or space is vacant. And so like their U&O is going to change every month. But other people, they've got long-term leases or they own the building and they know it's not going to change. They have the option to file like one time annually. And usually we send those notices out. We run like a little report and look for the accounts that meet those characteristics. And then we email all of those taxpayers and let them know they have this option. It is a mandatory, we do require that people file and pay electronically for U&O, which is, there's a number of taxes that we're moving towards a mandatory electronic filing and payment.
Right, it's just way more efficient and easy.
Well, I feel like it protects the taxpayer more. But never fear, we will always take checks and we will always take cash. But honestly, it's just so much faster and better to file electronically. Do you want to talk about the
Okay.
exemption, John?
Yeah, sure. So again, this is a tax that applies to businesses. So any property that's not used for business purposes, anything that's not commercial, any portion of property that's used for living space, for example, and also vacant property would be exempt. And then there's also a $2,000 annual tax exemption, which comes down to $167 per month. Okay,
Yeah, I
so
mean, so let's say, you have a multi-use building where you've got commercial on the ground floor and residential on the floors above. The only space that you actually pay UNO on is on that first floor, where there might be a retail space or a dry cleaners or whatever. Say if you had nonprofits in the building, nonprofits don't. If you had nonprofit as a tenant, that space isn't subject to use and occupancy.
okay, and the only thing I'll add is that, I mean, during COVID, we put out a lot of guidance on the UNO tax and, how that should be calculated, with a shutdown or, space that wasn't being utilized during the time. So if you need to refer to that, we have a dedicated webpage on COVID guidance on our website. And again, there's a lot of material out there on the UNO tax. So with that, I will turn it back to Rebecca, and she's going to tell us about the new and exciting Philadelphia Tax Center.
I know this is really exciting for nerdy people, I think. So the current, the old system, the city's tax system of record, is literally a 35-year-old mainframe database. It's very difficult to even find programmers. It's not nimble. It is very difficult to do anything online with it. So we are in the process of replacing it. It's a two-phase system. Some of you may have already interacted with it because we moved a lot of business taxes to it last November. And then we'll be doing phase 2. We'll launch October of this year. Eventually, everything, like starting in October, everything will find all the taxes and all of the fees that revenue administers, like the refuse fee, those are going to be online on the Philadelphia Tax Center. I'm very pleased to be able to say that it's completely accessible in Spanish and is mobile enabled. So, I mean, you could be walking into a client's, into a client's place of business or in their home, and like you could be looking at it on your phone or on a tablet or whatever. And so we will provide this, so we won't necessarily have to go over this, but like wage and BUR were all added to the system last year. The big thing though is that real estate tax and use and occupancy, realty transfer tax is all going to be on the tax center. We have also, the other thing, any of the, like I said, the commercial trash fees, that stuff will all get moved over in October. We will be putting out a ton of guidance about this, a ton of information in multiple languages. We have a guide out already, especially when we did phase 1. There's the link there. It includes like sections about what's changing and how to be ready, like to create a username and password. You don't, it's not instantaneous. If you already had an account, we actually have a kind of a security process that you'll need to go through where you get a letter in the mail. So it's really important that your address is up to date in our system. If you're a new taxpayer, you don't have to go through any of that. It's pretty instantaneous. You will not have to create, there's a lot of things that you can do without creating a username and password, including pay real estate tax. So, we are going to encourage everyone to pay real estate tax online, and that'll be a pretty straightforward process. And I think, it's a pretty intuitive system. I think people who are used to the old system hate it because they like the old system. And then people who are just kind of coming to us for the first time are like, oh, this is pretty great. So it kind of depends on where you're coming from. And it is like no website or system is ever 100% done. So as we release things, we do listen to people's feedback. We do listen to practitioners who tell us that this is an issue, it's not working right or whatever. We will go we will investigate all that stuff. And when we can, we'll make changes. So that's one thing that's kind of nice about having a modern cloud-based system, is that we can actually change it. So it's kind of a living, breathing entity, which I definitely have bad dreams about. But on the guide, there's like a video overview on how to create a username and password, how to give somebody access to a third party. That's really big. Like, that's the one thing that's really nice, is you as a taxpayer can say, this person's my accountant and I want to give them access to my accounts. And I only want my bookkeeper to have read only, or I want my accountant to be able to do everything, or, you know, whatever it is, you know, you have control over that as the taxpayer. On the guide, we've included a lot of downloadable flyers and other guides and information if you want to share that across your networks or within your other professional organizations. And we have an entire section in Spanish. So like I said, the site is translated into Spanish. It's not just like Google Translate. Like, we literally sent every page of the website to a translation company to have them translate it. We also have a dedicated newsletter for changes. And I would encourage you to sign up for our regular newsletter, because we basically send like up to date information to that newsletter as soon as we know it. We also never share email addresses, and we only talk about the stuff that you really need to know. And that's it. Let's see.
Rebecca, there is a question, says, regarding the new Philadelphia Tax Center, if you have several different LLCs, do you need to create a username for each LLC?
You do not. You do not. You need to create one username and password. You'll need to create one username and password, and then basically associate each LLC to the one account. So, Alora, if you have more questions about that, I can put you in touch with someone. But you don't have to do that.
That would be amazing. Different, like, existing.
On the first level review form, it looks like, yeah, I appreciate that OPA is not putting it there. I can't put it there because they don't have it posted online. I can't, so I'm guessing that the OPA has done that on purpose. But Alora, if you want to like give me your contact information, like through private message, if you want to just send me your email, I can connect you to some stuff. Okay.
Yeah, I don't think that first level review form is available yet.
They might be holding it until those notices go out. I don't know. It's definitely probably a plan decision. All right. Are there any other questions? Matt, do you have any other questions or anything we can help with?
No, I think the main thing going forward is for our members to keep abreast of this, because it's still kind of like fluid. Things are supposed to go out in the mail soon. There are some decisions that some property owners are going to have to make, and I think it's important for our members to realize, you know, past clients, people in your network, you know, you're a conduit to this type of stuff, and you're a trusted resource for those property owners. So anything that our members can do to help educate folks, it would be greatly appreciated. We're going to help out as well with getting that message out, because I think there's a big educational component to all of this. So, you know, I think we play a role in that, and you know, we have this relationship with Rebecca and John's office. Hopefully, we can leverage that relationship to help better inform our folks, to help better inform property owners.
And Matt, I'll send you the slides, and then you can just you know, send them to the entire group.
Great, thank you, John.
Sure.
If a client rented their property and forgot to unenroll from Homestead, will they be billed for the years that they forgot to unenroll? They will. There's a removal process. You know, there's just a form, like it's a pretty easy form. And what it will end up doing is it just goes through the system and says, oh, this became a rental in 2019. We're removing the homestead from 2019, 2020, and 2021, 2022. And it just sort of auto generates a bill. I think if you came forward, oh no, if you've tried to remove it for several years and it's still on there. So I put my email in the chat. email me and I'll forward it to the taxpayer assistance group and see what they can do. So for Conchetta and Laura, please just email me. I'm having a hard time like trying to copy your email addresses out of the chat and pasting them someplace. So I don't want to screw them up. So email me directly your specific questions and I will be able to connect you to answers. Yeah, we are happy to do this kind of, you know, we send representatives to community groups all the time, specifically a really, really awesome woman who runs our outreach efforts, Vicki Riley. I mean, who will show up to like any block party, any church event, any, you know, we do a ton of city council events. So like if your neighborhood association does regular meetings and you want somebody to come out and explain all of the tax assistance programs for homeowners, like we have someone who can do that. So it's definitely, like I said, my email's in the chat, let me know and I'll connect you to Vicki Riley and she's happy to get that on our calendar. And we expect, you know, we're beefing up our outreach team now to make sure that we're getting more folks who can come out. I mean, in a normal year, we would attend, you know, over 200 events a year. This, you know, of course, the pandemic that has dropped off. And so, you know, in person is our bread and butter. And it would be, you know, if you do anything else and if you want a representative to come out and help explain all this stuff, just let me know.
All right. Rebecca, John, thanks for all of your time, your expertise. You guys have been great to us. Thanks, John, for working through all the scheduling of this. And Rebecca, in the past, you've been awesome because I know we reached out to you when we had somebody had something funky that happened, and I know that I reached out to you a few times and you helped get things unstuck. So awesome to have that resource available and your willingness to go ahead and share your contact information to help our folks out. So that's what this is all about. It's about making connections with the right people within city government so that we can help out folks across the city. So with that, everybody have a great day. Rebecca, John, take care and keep cool out there, folks. Have a great weekend.
Absolutely. Thank you, everyone.
Thank you.
Have a great weekend.
Take care.
Bye-bye.
Bye-bye.